Okay, welcome to the Lifestyle Trader channel. This is Michael, your trader. I'll go through today just a quick update on the crypto markets and what's happened overnight. You can see in the last 24 hours we've had all the major cryptocurrency pairs being sold off heavily due to a number of factors. Could be anything, could have been the trigger. Obviously the coronavirus has been some of the catalysts that's going on. Across the board on the stock market, it's also been selling off. But you can see we were seeing a sea of red. Only a few in the top 10 are up. So Tezos up 3.9%, Chainlink, but the rest are down quite heavily. So judging from the top, Bitcoin's down 5.1%, Ethereum's down 8.75%, and you can see across the board it's not been a very good day for the market. Now let's go have a look at the charts. We'll have a look at the general stock market just to give a comparison as what's happening across the board. So take a look at the Nasdaq. It's been many down days for the Nasdaq, coming off its all-time high. So not a really good place to be buying, especially if you're buying the dips. So buying the dips with the Fed potentially coming back in to save the market. People are expecting to buy on these dips. Hasn't eventuated, and we're getting a proper correction in the market, which is really due to a cycle that we're in. We're in a long 10-year cycle. We haven't had a major correction. So this sort of move after a large gain from the August lows is not unusual. So we almost reached a high of 9,800. Haven't quite got there. We have pulled back. And judging by this pullback, if we use Fibonacci, just a way to judge where natural support levels could find, the market could find itself at. If we run it from that low of October to the high of February there, we're just past the 38% correction level. Really need to come down to a 50%. That'll be a level where you could find support. Usually a proper correction will take us down to 50%. That would be 8,613. And we are correcting quite largely. Quite a larger correction. It will take us down to 8,343, which is the 61.8%. Now let's have a look at the cryptos in general and see what the chart patterns look like across those markets. Let's have a look at Bitcoin. Bitcoin has sold off numerous days, and also the same thing here. We've had a large rally from 18th December lows. Now, judging by this correction, let's have a look based on its high that it's achieved back over at 13th of Feb. Same here, we're just shy of the 50% at 8,000. Let's round it to 8,500. So it did break below 8,600 and has somewhat found a little bit of support there. But naturally, we should expect some prices to come back down to at least a 50% to be somewhat of a decent correction for potentially another resume back up. Now, looking at Dash, this is correct a lot larger than Bitcoin. You can see it's coming down to the $80 level. Now, this would have corrected at least 50%. You would imagine that Bitcoin would hold compared to the other coins, the altcoins, and you can see here that it is just below, above, the 6.81%. Natural tendency for round numbers to find support at $80. That's not unnatural for that to find support there. Now, if prices do hold, we should see a candle, which usually would represent a rising price. If it stays within this range, it could potentially break down further. Let's have a look quick at Ethereum. Ethereum's corrected a lot less than the other altcoins. It's holding up quite well relative to the other markets. And you can see from a correction standpoint, it's only it hasn't hit its 50% correction level from December lows. So that being said, it has broken down below previous day's low and it's probably finding support here. That being said, the 50% is always a natural tendency for it to reach, which is the 200. So psychologically, 200 level would be a natural level for it to find support on a round number, and that also brings it back to 50%. Have a look at Litecoin. Litecoin's doing an ABC correction, which is a natural tendency for a correction to occur in markets. ABCs are when you have a two-leg down. So we take a look at this pattern here. I'll just highlight it there. So there's an A there, takes you down to a B. There's a C, and then the final leg, which is the D. Now that tends to reflect buyers coming in on the last leg. So we take a general retracement from December lows. It's just past its 50%. It's trying to find some support here. The range of the day is quite small, as you can see by the bar and the candle there. The 6.81% is at $55. Still early to tell, but it's certainly not unusual for it to break down to get down to 6.618% and then find some support, which is where previous prices have been as well. But that's not all bad and doom gloom. That if you have a strategy and a way to target these breakdown, if you're not familiar with shorting or short selling, there's ways to take advantage and profit from these moves down. Now, we do run a strategy that allows us to target and look for these. So whether you're holding cryptocurrencies long term and you want to be able to hedge, which is simply to protect the downside, you can look at shorting this downward move. So it's not always doom gloom. If you know how to target the opposite side of the market, you have the ability to take advantage of these moves. So simply, if you're trading like in our accounts that we do, you'll be able to take advantage and sell these declines, and they can be very profitable because the declines are very rapid. So I'm going to switch over to a strategy we use. We call it lifestyle trading because it only requires once a day monitoring. Now you can see a couple of things I'll just highlight. These are custom indicators that we put on the chart. There's 3 that we generally follow, and for subscribers to be able to follow and the strategy and implement them. It works across all the major cryptocurrencies. We don't target the illiquid one. It still works on those, but liquidity is an issue. So you can see we're looking at Bitcoin Cash. We don't do Bitcoin specifically because Bitcoin tends to have more of a safe haven. The shorting does work, but not as effective, and you have a high correlation where they tend to move in a similar fashion. So Bitcoin Cash is our replacement for that. And you'll see Ethereum and Litecoin. So 3 is enough to really build a basket on the short side. Now, where you've got this purple dotted there, that's our entry signal. So each day, on this day here, we enter, this is our trigger day. So this is a day on the 15th of February. Now, we had a trigger to enter or condition, which is a red background. The trend is now turning down. After that completed candle on the 15th, we had a short entry condition to go in at 420. We had our stop loss, initial stop loss a little bit above, and then our trailing stop is that blue dotted line that actually is following the mark on the way down. So that's our trailing stop. The minute that overtakes our stop loss, it moves lower, we'll move our stop to that level. The other thing important to note is that we do have other exits, which is important. The other exits, which is that green step line, that's our profit target. That's set inside the market, that adjusts to volatility. The minute the prices hit that level, we will sell out. The other alternative is if we see prices start to reverse. This is our reversal indicator down below. If we close down below the red line, it will give us a condition to exit. So far, we've been in this for a bit over 10 days. Got on this 11th day, and you can see there's a potentially inside candle, which means there's potential to break down unless we get a big rise in prices and take out the previous day's high or so. This short small candle means the market's taking a break, profit taking, selling necessarily hasn't stopped. It's just resumed. It's just taken a pause, and that pause can lead to further selling. So that's quite a good sell at 420. We're sitting now at 321.97, so we're just shy of $100 per contract or per coin. Now on the side of Ethereum, we did close out a trade from here, which was one day. It hit the target. We got in at 245.28, and it's hit the target, which is our profit target, at 217.38. However, after we've closed, we had another trigger to come back in. With the trend still going down, and that trigger was at 21.6 216, which we got filled at, and we're just slightly above. Our initial stop is intact, but with the blue dot, we will track the price down further tomorrow and be able to reduce a lot of that risk. One thing with the reverse indicator you may have noticed is that it is also a trending base, which means if the market is if it's below the red line, we will stay in the position until we cross above and then come back down. What that means is that if the market is trending down or there's quite a lot of selling taking place, we will stick with a position on the way down until it reverses back up and then pops back down again. So we're waiting for what we call a cross, where it goes below the red line. However, if it's already below, we wait for it to come back up and then cross back down. So the same thing occurring with Litecoin. We had a trade that occurred yesterday, picked that up at 65.39. That's still in the trade, and we're close to target. At the same time, we are just below the initial cross, so that means we should exit today. My apologies, it's crossed below, so we should be exiting that position today on the open, because we just crossed down below that trigger level. So we'll take the profits there. So you can see across the board, just because the markets are down, it doesn't necessarily mean that you can be losing money. If you're familiar with shorting and have a strategy target for it, there's good opportunities to take profit, particularly for a short period, for some large gains compared to on the upside. The only disadvantage with shorting is that you do need to manage your risk well. You could go unlimited on the way down because you're using margin to short. So let's show you the shorts that we've got open. Now that's the short that we've got open on LTC. I'm going to close this off, and we have the other one, which is Ethereum, that's still open. Okay, that wraps it up for today. On the long side, I'll show you what we're looking on the long side. If there's opportunity, we're looking for the reverse, for trends to initiate a buy. Given the current market condition, there's not going to be anything at this stage. But just to show you what's on our radar, we do track a little bit more on the long side, potentially for big moves. And until the trend has changed to go the opposite direction, there is nothing really to buy. You can see on the top is Bitcoin Cash. We've got Bitcoin down below. The green background indicates the trend is up, so it's direct opposite to our shorts. The blue dotted is our buy entry level. The red dot is our trailing stop, and we have an inbuilt initial stop to protect the position. As you can see across the board, you won't expect the trend to be up. It's going to be quite some time. We'll revisit this in our next video, but essentially there's nothing to buy at this stage. We're just simply initiating closing, entering our shorts and closing when they hit target. When the market resumes its uptrend, we'll be in the position to take advantage of that. That's the idea behind trading with momentum or trends, is to target, look for opportunities where they arise, and take it when the market is poised to make a big move. Thanks for watching this video. I'll see you on the next one.